Tiger Brands closing at 186 Rand. We're up 1%. Your thoughts on the results? Any key points that stood out for you in particular?
The margin at the sort of bread and milling division was strong once again. It's been strong since the second half of 09, well above sort of normalized margin. So that concerns us, given that division contributes about 45% of the operating profits of the company. So should that margin normalize, the sort of earnings would be under pressure.
Would you be buying Tiger Brands at 186 Rand?
No, our fair value for the stock is slightly less. We sort of sold out at the probably about 6-9 months ago now out of Tiger Brands. So we would be looking for sort of a much cheaper entry point than the current levels. I think most of the market has got earnings going flat to down for FY11, and the company as much pointed to quite a difficult first half, which might be their concern around the rand as you had in your insert, or alternatively the margin normalising in the bread and milling division.
What about their aggressive strategy into Nigeria? Couldn't that be part of a huge growth story for Tiger Brands?
I think Africa is a strategy for a lot of South African companies. I mean, across the board, if you look at the telco companies, MTN, Vodacom, even the pharma companies like Adcock. And I mean, Africa is not without its risk. We've seen great success stories like MTN, and then we've seen massive write-offs from the likes of Telkom, etc. So, Nigeria is not the panacea to everything. I think some companies will be successful, and others will not. And I guess it's still early days to try and work out which companies will be successful.
Johnny, we've been speaking for a couple of months now, and you have been expecting a pullback in the market. How do you rationalize what is happening in the broader JSE all-share at the moment? We continue to push higher. Obviously, yesterday, a slight breather, we were down 1 2/3%. But it looks as though, even with the risk in the system at the moment, the quantitative easing, the liquidity in the system, will see equities pushing higher, and perhaps even through the all-time high on the JSE all-share above that 33,000 before the end of the year.
I mean, the market does continue to grind higher. We've had a bit of a pullback in the last 2 weeks, but I guess the last time I was on, we sort of talked about Chinese inflation, which came out the very next day. We are concerned about inflation in emerging markets, and to the extent that the Asians will have to try and slow their economies if they want to try and slow inflation, and what that impact that could have on risk assets, all the ways from commodities through to equities. And the South African equity market is not cheap at sort of 16.5 times earnings. So that is our concern from a valuation perspective. The market is not offering great, compelling value at these levels.
Do you expect then China to be the risk, as you say, moves by that central bank to cool the system, to cool the economy in China? But are we going to see the Chinese economy, in your opinion, dramatically dropping off the 9.6% growth rates that we're seeing at the moment?
No, I don't think we're going to necessarily have a hard landing in China. It's just what is built into the market's expectation of growth and what will ultimately be delivered. So, I mean, the world economy needs some engines of growth. The US, our view on the US is that going forward, they're going to have higher taxes in the US going forward, and that is going to slow that consumption engine, and China might not be able to compensate fully for that, and therefore growth will undershoot slightly, not necessarily a double dip, but below what the market is expecting, and that will have an impact on equity valuations.
Despite the general market grinding higher, as you've pointed out, is there anything from a valuation perspective that catches your eye in the top 40?
I guess, yeah, similar question to what you sort of posed last time. There's still some of the sort of unloved industrial counters, the likes of Altec, Altron, which have come off quite a lot and haven't rallied as hard. The gold shares we still think offer good value. They seem to be getting their costs under control now, as well as with the sort of higher gold price. We think the gold shares are still relatively attractive.